What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Albaum, and today with me I have Dave Dubeau, who is a Canadian capital raising expert. And he's going to be talking to us today about what we as real estate investors should know about raising capital and how to raise capital for our next deal. So let's get into it. Dave Dubeau, thank you for taking the time out of your schedule this morning to hang out with me. Really appreciate you coming on.
Big Mike, it's my pleasure.
So you and I know each other from before recording, but for all of our listeners out there, can you give us a quick rundown of who you are and what it is that you're doing in real estate?
Yeah, well, I am a fellow real estate weirdo. I'm into this wild and wonky world of real estate investing. I've been doing it one way or the other since about 2001. Actually started when I was living down in San Jose, Costa Rica, of all places, Michael. I spent a decade living in Costa Rica and had a language training down there, a language training company. Bought the small building that we ran the business out of. Ended up doing a couple of what we would call pre-foreclosure deals down there. Didn't know what the heck I was doing. Didn't even know what they were called or whatever, but they worked out all right. And then I packed up my Costa Rican family, my Costa Rican wife, and our two little Costa Rican kids. And we moved back to the frozen hinterlands of Canada, where I come from originally. Everybody goes, especially Canadians, they go, Dave, dude, what's going on? You're living down in tropical paradise. You're living the life, and you packed everybody up and you moved back to Canada. What the heck was going through your brain? Well, here's the thing, Michael. We don't realize what we got till we leave it for a while. And as lovely as Costa Rica is, being the rather fair complexioned person I am, in other words, pasty-faced white guy, being the pasty-faced white guy I am, whether you got money or not in Latin America, everybody assumes that you do. So there's a target on your back and that of your family. Now, thank goodness nothing ever happened to us, but I know two people that got kidnapped and held for ransom down there. I thought, hey,
oh my gosh,
small town Canada, that hardly ever happens. Never.
So, go figure, yeah.
So our kids were getting towards school age, so I said, hey, you know what? Let's start over again in Canada. And so we moved back, but that was in 2003. And then I had to figure out what the heck am I going to do, right? Because I'd left a business in Costa Rica. I hadn't been able to sell it, so I didn't have very much money. I'd been gone for so long, I didn't have bad credit. I had a big fat 0 for credit. I've been self-employed for 10 years. So it's pretty much unemployable. So it's like, okay, hey, what next? And you're probably way too young to remember these things, but I saw one of those late night infomercials that went something like this. You too can get rich with real estate with little or no money down. I said, perfect. That's what I got, little or no money. So I set away for the course and brushed it off. And I think back then it was a bunch of binders and there might have been a VHS cassette or two in there.
And I put some 8-track tapes,
Well, not quite that bad, but getting there. And I put it to use, and I did 18 creative deals in 18 months, and that's when I got started with real estate. Took a few years off, helped a up-and-coming real estate guru up here kind of grow his company for a few years. Got back into it, started doing not so creative type deals where I actually had to come up with money for down payments, and quickly ran out of cash and credit. Like most people do, I hit that wall and I said, hey, I've heard of this thing, OPM, other people's money. So maybe I should get myself some of that so I can grow my portfolio. So I rushed out, floundered around, and failed miserably at raising capital. And I remember I had this beautiful deal on the go. I needed $85,000 to close on it. I tried everything that people told me you're supposed to do. Dialed for dollars, networked, schmoozed, spammed everybody I knew, and bottom line, turned off a lot of really good prospective investors, did not raise the money, lost the deal, got some major egg on my face, and after the dust settled, I said, you know what, that sucked. I don't like dialing for dollars. I don't like networking and schmoozing and turning every conversation into a real estate conversation. Why don't I apply what I understand about marketing, see if I can make that work to attract investors instead of always chasing after them. So by hook and by crook, I came up with this process that I call the money partner formula. Worked pretty well for me. When I was doing those single family home type deals, I raised not a heck of a lot, but probably in the range of $700,000 or so for those kind of deals. And then since then, I've scaled up into multifamily properties. I've raised millions for those kind of deals. But more importantly, I've helped other, what I call mom and pop real estate investors really get things rolling. And cumulatively, I've helped people raise well over $300 million and counting for their deals. So it works pretty good.
That's incredible. So
yeah,
Dave, I think you hit the nail on the head that so many people either hit that wall as they're growing their portfolio, or even folks who are just looking to get started don't have the capital to start on their own. So how should people think about raising capital? Is it something that only is reserved for the experienced, or is it someone that who, if they're just getting started, would also be a good candidate for?
Well, it's kind of one of those catch-22 things, right? So, hey, I want to get going in real estate, but I don't have any money. I need money to buy a deal, but I don't have any money. So how do I get, if I don't have the experience, how can you get the money, all that kind of thing. Here's the bottom line, Michael. It's a lot easier to raise capital if you've got some experience. Do you need to have a ton of experience? No. But I would suggest if you have even one successful deal under your belt, that's enough to give you the credibility to go out and start using other people's money to grow your portfolio. So what do you do if you don't have money or experience? Well, there's a few different things that you do. Well, if you do have money, then obviously self-finance your first deal. That would be really smart. You got skin in the game. You're going to pay close attention to how that goes. If you got some money, but not all the money, if you can partner up with somebody else as a joint venture partner, you both put in some cash, you do all the work, and you still split the profits 50-50 with your investor partner. That's cool. That gets you started. If you don't have any money, but you've got some experience of some sort, you can bring value to the table, go find somebody who's doing what you want to do, partner up with them, not for a paycheck, but for a tiny slice of equity in the deal. And whatever that requires, if you're good at social media, if you help the person out with social media, or you bird dog for them, or you, whatever it is that you do, say, hey, I want to be involved in this. I want to learn what you're doing. I want to be able to use this deal as a case study. And again, you only need to have one deal. And if you do it that way, you've got some legitimate experience behind you. So there's some ways to get involved if you don't have a heck of a lot of cash.
Okay, great. And then so for people that maybe do have a couple deals under their belt and are looking to take that next step but are running out of capital, how do they position themselves? How do they market themselves? How do they not dial for dollars to help to start raise capital?
Yeah, good question. Because I think most of us would rather stick a needle in our eyeball than dial for dollars. It's no fun whatsoever.
Yeah.
So here's what, and it's, I'll give you the big 30,000 foot perspective of this 5-step process, Michael. So step number 1 is, instead of just shotgunning it and thinking everybody and anybody with a pulse and a checkbook could be an investor, what we want to do instead is we want to laser focus in on people that you already have a pre-existing relationship with, people who you know and who know you, friends, family members, coworkers, business associates, people you know from the PTA, your sporting associations, civic associations, whatever. You've got a pre-existing relationship with these people. So what we do with our clients is we help them come up with a list of about 150 to 200 of these folks. And we think, oh my goodness, I don't know that many people. Chances are you do. All you have to do is export all your contacts from your cell phone, your email address, your social media, all those different places, and then get them all into one place. Chances are there's a couple of thousand there, and then just quickly whittle it down to people that you actually do know. Okay, so that's step number 1. Come up with that target group of potential investors. Now, if you got 150 or 200 people in there, they're not all going to become investors, of course, but typically there is a significant number in there. And what we find with our clients is there's usually between $1 and $2 million worth of capital within your sphere of influence already. We just have to figure out who's got it and how can we get them to get ready, willing, and able to invest with us, right? So the good news here is when we focus on this pre-existing group of people that you have that relationship with, you've got 2 out of the 3 things you need taken care of. In order for somebody to invest with you, they need to know you, like you, and trust you. This group of people, they already know you. Hopefully they already like you. And they might trust you to babysit the house or the dog for the weekend, but not their $100,000. But we can work on that. Does that make sense?
Okay.
So we got
Totally.
2 out of the 3 taken care of there. Plus, this really helps you keep compliant with your local securities regulator. So I'm up here in Canada. We've got our own securities regulators. They're no nicer than the SEC. They're just as nasty. You guys in the States, you got the Securities and Exchange Commission. I believe each state has some sort of regulatory body as well. So you got a double whammy. But bottom line is there's this area that we are allowed to play in, and that is with, again, people that we have that pre-existing relationship with. So let's start with them there. And then instead of doing what Dum Dum Dave did, which is just charging in like a bull in a china shop and saying, hey, it's Dave, I got deals, you got cash. Let's be a little classier about it. So let's reconnect with that target group of people on a personal level first before we start talking business. Does that make sense, Michael?
Absolutely.
So what we do is we do a very simple partially automated warm-up campaign. So we do this by email. We can set this all up in a CRM system so it goes out all at the same time. And then your job is when people reply back to you, actually have a genuine reconnection. Go back and forth a little bit by email with them because there is capital in those connections. Plus, if you do it right, it sets the stage for everything that's going to be coming down with the other 4 steps in this process. Is that making sense, coming up with that target group of people first, Michael?
Yep, with you so far.
Yeah, all right. Then the second step is, now that we got this target group and now we kind of broken the ice with them, some of those people might actually put up their hand and say, hey, Michael, this real estate thing sounds kind of interesting. Why don't you tell me a little bit about it? So now we got to be ready to have an effective investor meeting, right? Most people don't have the faintest clue about how to present their investment opportunities to a non-real estate person. Like we can get together at RIAs and real estate investment clubs and we can all nerd out and talk ROI and, IRRs and NOIs and all this kind of jargon that the average person, they're going to zone out and they're going to feel dumb and they're going to shut down, right? So we got to make sure that we've got a good, I recommend a slideshow presentation, like a PowerPoint or a Keynote or whatever, Google Slides, that walks people through at Reader's Digest level about what you're doing with real estate. So what does Reader's Digest level mean? Well, Reader's Digest is a magazine, still exists, that's written for grown-ups. However, it's written at a 13-year-old comprehension level, right? So any average grade 8er can pick up this magazine and read it and understand everything, okay? We want to do the same thing for our investor presentation. Not that your investors are dumb, they're just not real estate weirdos like us. So we gotta dumb it down for them. We gotta keep it really simple. We gotta keep it focused on what's in it for them. We gotta go through what our process is, what the pros are, what the cons are, the rewards, the risks, how we mitigate those risks, overcome objections, answer all their questions, and do this in a fairly short presentation that you can go through with somebody at a coffee shop or on Zoom or what have you in about 25 to 30 minutes with a lot of Q&A in the between there. So step number 2 is creating what we call your $1 million investor presentation and being ready, willing, and able to use it. So that's step number 1, come up with a list. Step number 2, create this presentation and get comfortable using it. Step number 3 is where we really kick things into gear with the marketing. Constant and consistent communication. This all starts with having an investor-focused website. So having a website that's completely focused on communicating with your prospective investors. And this is going to be your online marketing hub. All of your marketing is going to be there. We're going to be attracting people to your site via email marketing. We're going to get them to consume your edutaining communication. We're going to be keeping in touch with them at least on a weekly basis. Some of the things that are working really well for our clients these days are video logs, short little 3-4 minute video snippets there. They kind of, again, edutaining, a little bit educational, not too much, hopefully a little bit entertaining, and with a clear call to action. Hey, if you'd like to find out more about this, go ahead, click on the button below, book a call. Let's see if this makes sense for you. So video logs, blog posts, short little articles, again, keeping them edutaining, e-zines, electronic newsletters once a month. So every single week they're getting something different from you that's educating them a little bit, hopefully entertaining them a little bit, and encouraging them to reach out to you instead of you chasing after them. You following along with me here, Michael?
Gotcha.
Yeah, so this is what we do to get things rolling so that you get inbound investor inquiries instead of having to chase after the investor. So this is getting people to self-identify, put up their hand and say, hey, this real estate thing, Michael, it looks kind of cool. I'd like to find out more. And then that conversation is a complete 180 from us chasing them down, picking up the phone, dialing for dollars, schmoozing, turning every conversation into a real estate conversation. This way, we're piquing curiosity, we're piquing interest, and we're getting them to reach out to us. So that is, I believe that was step number 3 of this 5-step process. Yeah. And then step number 4 is being seen as trustworthy, being seen as a real estate authority in the eyes of our target group of a couple of hundred prospective investors. So here's the good news, Michael. You don't have to be the next, Robert Kiyosaki and sell a gazillion purple books to be there. You don't have to be, Michael with his own podcast and all this kind of platform. There's lots of simple ways that you can do this. And again, we really want to work on, we've already got the know factor. These people already know us, they like us. Now we have to work on that trust factor. So it's about being seen as knowing what the heck you're doing with real estate. So a lot of the marketing stuff that you're doing, the website, all of that stuff, that's going to set you up. That's going to set you up for success. It's going to make you look like a professional. Other things you can do, dress up a little bit. All right. So if you're meeting with somebody and you're talking with them about investing with you, I highly encourage you to, gentlemen, put on the blazer, dress business casual, right? It's going to show the other person respect. And even if it's your Aunt Hilda that used to change your diapers when you were a baby, you're going to get a little bit of respect from them as well because you have dressed the part. Does that make sense? Talk intelligently about your strategy. Talk intelligently about your market. Have sharp-looking materials. Don't go cheap on the business cards. Get some good-looking business cards. Invest in some headshots, professional headshots, not the Walmart ones, not the selfies, professional headshots. Things like that go a long way to, they're inexpensive ways to be seen as an authority in your field.
Message received, Dave. Me over here in my T-shirt as we're recording this podcast.
Well, you're not hitting me up for any money here, Michael. So it's all right.
All right. Okay. Good.
All right. And then step number 5, before I forget, because I get kind of forgetful in my old age. Step number 5 is all about starting the snowball effect. And Michael, I'm sure you've seen this because you've been in the game for a while, right? Is once you've got an investor on board and you're doing a good job for them, it's so much easier to get more of them because these people tend to know other people with money. And if we're proactive about it, we can get really good testimonials from them. My favorite are video testimonials. You can use them all sorts of different ways. You can create written testimonials from them. So video testimonials are great. And warm introductions to their sphere, to their people, right? So if you're doing a good job and you're proactive about it, it's very, very easy to start growing your investor base with that second ring of the people that your investors know. So that in a nutshell is the 5-step money partner formula. Start with a target group of prospective investors and break the ice with them first. Have your second step is have your investor presentation ready to go. So when people do put up their hand, you don't panic like a deer in the headlights. Step number 3, kick things into gear with the marketing, constant, consistent, edutaining marketing coming out on a weekly basis, something different every single week with a clear call to action. Hey, if you'd like to find out more, click on the button, book a call, and let's have a chat. See if this can make sense for you. Step number 4, kick things into gear with your credibility. Be seen as an expert authority in the eyes, again, of your target group of investors. And step 5, once you got 1 or 2 investors on board, start the snowball effect with referrals and testimonials. My goodness, I've spoken so fast, my cheeks hurt.
No, that's great, David. And it makes so much sense, and it's interesting to kind of sit back and see the true marketing effect, because I never would have thought the two go hand in hand, which is really interesting to see.
Well, you know what? I'm a marketer from way back, and any time you can get somebody to self-identify and reach out to you, that means that person's already coming to you to a certain extent pre-educated. They are, to another certain extent, pre-qualified, and they're already predisposed to invest with you because they see you as the logical choice. They see you as the expert. So if you get all this stuff right, it works like gangbusters.
Oh, I love it. One question I have for you, Dave, is with regard to step 1. So one of the many things that I hear from a lot of folks that join the Roofstock Academy is I don't know anyone in my sphere that is interested in investing in real estate. Everyone I talk to about it thinks I'm crazy. My parents, my cousins, my family, they all poo-poo it. So what do you have to say to those folks that really don't know anybody that would be interested in investing in real estate within that first sphere?
I would say baloney. I'd say something else. Well, let's keep it PG. Here's what happened. In that scenario, Michael, is the person has run out like a crazy person saying, hey, I'm doing this real estate thing. It's great. It's awesome. You should do it with me. Have you got any money? All right. That's maybe not that tacky, but that's kind of how they're coming across. Mm-hmm. They're coming across like a network marketer. You know what I mean, right?
Yeah,
absolutely. They're coming across as an MLMer, and it just seems like another one of these things. Maybe it's a phase they're going through or whatever. So you can't blame people for being a little bit cautious if you come in that strong that way. That's what I did back in the day. That's why I can joke about it, because this guy did the exact same thing, right? With disastrous results. So it's not that your friends and family members aren't interested or can't be educated into becoming interested. It's just that you try to ram it down their throats in a clumsy fashion, right? Versus educating people, creating that curiosity, getting them to put up their hand, take baby steps, and go in that way. Because here's the thing, right? If you do this right, if you do this process right, you're going to be able to accomplish two things. You're going to be able to get the low-hanging financial fruit and get your first few investors in as little as 4 to 6 weeks. That's quite common. But here's the beautiful thing. If you keep things rolling, those first few investors only represent about literally the tip of the iceberg, because that might represent the top 10 to 15% of all of the capital that you can raise from your contacts. The other 85%, it's going to take them a little bit of time to get comfortable and confident and be ready, willing, and able to invest with you at that time. So that might take 6 months for some folks, 12 months for other folks, 18 to 24 months for other people. So that's why the constant, consistent communication is so important, because you're going to be able to do both. You're going to be able to get the quick capital and the long-term capital. And if you're in real estate for the long term, you'll want both, because the lion's share comes over time. So again, if you think you've tapped out your friends and family and nobody has any interest, or everybody you know is broke, I'm going to gently suggest you're wrong. And just statistically speaking, I mean, I don't know if you're familiar with the book, The Millionaire Next Door. Mm-hmm. Have you heard of that book?
Yeah.
Yeah. So they wrote this book a while ago, and they studied millionaires in North America, and they found out the vast majority of millionaires don't look like Hollywood says millionaires should look. They aren't hanging out on yachts with bikini-clad babes bedecked with jewelry and all this kind of making it rain with dollar bills all over the place. They're everyday people living in everyday houses, driving everyday vehicles, who happen to be extremely good with their money. That's why they've got it, right? So don't assume. That's the biggest, danger a lot of people have. They assume nobody has any money. They assume that the people that are all flash have got cash. It's quite often not the case, right? They're all flash, and that's about it. So never make assumptions. If you haven't been successful in raising capital from friends and family yet, it's because you don't know how to do it properly. Don't think it doesn't work. You just don't know how to work it yet. And then here's the other thing we have to sit back and we have to look at, Mike. We have to, I'm going to splash some cold water on people here, because I see this all the time. They go, well, I don't want to raise money for my friends and family. I've heard neither a borrower nor a lender be. Don't mix friendship and family with business. Right. And you're right. If you do it wrong, it can be a recipe for disaster. If you do it right, it's absolutely no problem. But we got to be logical. When you're first starting to work with investors, who the heck else is going to invest with you? Quite frankly, you don't have a track record working with investors. Right. Why would an accredited investor even give you the time of day if you don't have a track record? So where else are you going to get started? Nowhere else, right? That's the rock bottom reality. So you got two choices. you can continue to self-finance your deals and save up money for down payments and deals and do onesie-twosie deals every 5 to 10 years. Or you can tap into your sphere of influence and really crank things into gear and start raising capital and doing a lot more deals. And here's the other thing. We need to get our heads around the fact that it's not them doing us a favor, right? We think our investor partners are doing us this huge favor by investing with us. Well, yeah, they are, but it goes two ways. We're helping them do something they cannot or will not do on their own, which is investing in real property. And the statistic I've heard, Michael, and take it for what it's worth, right? Statistics. The statistic I've heard is that 5% of the general population has invested in a revenue property. Only 5%. Okay? So again, we hang out with a lot of real estate weirdos, so we think everybody invests in real estate. Your own house doesn't count, by the way. So only 5% is actually invested in a revenue property. So if you've got one successful deal under your belt, chances are you're ahead of 95% of the non-real estate people that you know in your sphere. So it's up to us to show people, educate people about what we're up to, and offer them the opportunity without being salesy, without being high pressure, without twisting anybody's arm, without cold calling. Put it out there, educate them, get the people to self-identify, come to you, and I tell you what, it works really, really well.
I love it, Dave. I'm curious to get your thoughts and your teachings on how you structure partnerships in terms of percentage ownership. So that's a question I get all the time in the academy.
So again, what kind of deals are we talking about here? Give me an example.
Let's talk about a 5-unit multifamily property, a small multifamily property. Let's call it $300,000.
So $300,000. So all in, let's say we need about $80,000 to get into this deal.
Perfect.
80 to 100 with a few renos and stuff like that.
Yeah.
Okay, so that might be one or two investor partners on board. And I won't talk to how you structure this if you're going to do it in a corporate structure or whatnot. I'll just talk about numbers, all right?
Generalities, yeah.
And for those kind of small deals, I would suggest 50-50, okay? So your investor partners bring the capital. Ideally, in these kind of small deals, they're even bringing the qualifications for the financing to the table. That may or may not be necessary in this particular situation, but they're coming on board as joint venture partners. Their responsibility is to bring the cash and the credit. Your responsibility is to do all the work, all right? And then you share the profits 50-50 after they are covered first. Does that make sense? So their capital is assured first. If you're going to be doing a refi on this property, you're going to be selling it, whatever it is, they get paid first, and then you split the rest 50-50. Okay, same thing with the cash flow. You're covering all of the expenses, and you're sharing the cash flow 50-50. So that's probably the simplest way to do it for smaller deals.
Okay, and as the deal size goes up, are you thinking that the cash partners should be getting more or less of the percentage of the deal?
Typically, the larger the deal, the larger number of investor partners you're going to have on board. You're probably going to start syndicating things. And in that case, you're probably going to have to take a smaller percentage of ownership and profit in the deal, give more to your investor partners just to get them the kind of ROI that they need to make it attractive.
Dave, this has been great, man. You have a training course, and I know you've written a book. Can you tell us a little bit about where those are, where people can find out more about them and you?
Sure. So I got this book back here called Money Partner Formula. You can get a PDF copy of that, my treat, in exchange for your name and your email address. Just go to my website, moneypartnerformula.com. You can poke around there, see what we're up to. I think there's a tab on there that says free book or something like that. So go ahead and click on that, and that will get you the book. If you're interested, every once in a while, we do a full day virtual workshop, taking a deep dive into this whole Money Partner Formula thing. You're welcome to join us via Zoom for one of those. Or if you just want to have a chat and see how this is going to work for you, you can book a call and we can have a capital consultation and see how this can all work for you.
Fantastic. And that can be done on the website as well?
Yeah, all of that, moneypartnerformula.com.
Love it. And you also have your own podcast as well. Can you share with folks the name and where they can find that as well?
Yeah. So on my podcast, I interview some really smart folks like, Michael. Just And the podcast is called Property Profits Real Estate Podcasts, found on all platforms where great podcasts reside. So iTunes or what have you, it's all over the place.
Love it. Well, Dave, thanks again for coming on, man. This was a lot of fun, really interesting stuff, and looking forward to chatting again soon.
My pleasure. Thank you so much, Michael.
You got to take care, Dave. Okay, everyone, that was our episode. A big thanks to Dave for coming on. It was a lot of fun. I learned a ton about raising capital and things to be thinking about and be aware of as you're putting together your next deal if you are looking to raise capital. As always, if you like the episode, feel free to leave us a rating or review wherever it is you listen to your podcasts. And we look forward to seeing you on the next one. Happy investing.